As a home buyer getting financing, when you run into a multiple offer situation, that can really complicate things. Should you ask for seller paid closing costs? What should you do about financing? We're going to cover all of that and more in this video. I'm Peter Lindquist with the Lindquist team. I'm here with a dynamic realtor in the Twin Cities area, Travis Anderson. If you like this video, please consider giving it a thumbs up, subscribing to the channel, and certainly if you've got any questions or comments, please leave them below. Let's go ahead and get right into it. Travis, sometimes I've got buyers that are wondering, how does my offer stack up against other offers in a multiple offer situation? I just think it's really important for buyers to understand whether they're in a strong position or in a weaker position. And if they're in a weaker position, how do they improve their offer? Okay, so if you're a seller and in front of you, you've got several offers. Some have seller paid closing costs. Some are government insured loans like FHA or VA or USDA. Some are minimum down conventional loans. Some are large down payment, and maybe one is cash. Can you tell me, if you're a seller, which of these are looking the most attractive to you?
Yeah, for sure. I mean, if all things are equal, and in other words, if all other terms are equal, and we're talking only about financing, Peter, we're going to look at the cash offer first, right? So assume for a moment that the price is the same and the closing date is acceptable to the seller, and the other terms are relatively similar. Well, then the cash offer is going to stand out as being like the best offer when we're talking about financing. And the next best offer then would be a conventional financed offer, usually with a higher down payment, 20% down or more, something like that. I mean, if somebody's putting 50% down compared to 20%, I'm not sure that really sways the bar any. But 20% down conventional would be better than 3% down conventional. And then we kind of look.
I'm going to just interrupt you for 1 second. I think some buyers don't understand the fact that they look at it and say, well, money's money. It's green, green is green, right? But it has to do with the level of complication. So a cash offer, the buyer has the money, there's no problem. They don't have to get approved for it. They just do it. With any financing involved requires some level of complication. The buyer has to be able to be approvable. Okay. I just wanted to make that one note.
Yeah, for sure. And I would add to that, Peter, that that level of complication is dependent on the type of financing, the amount down, and credit worthiness and liquidity, right? So,
Yeah.
And that's why conventional would be in practical application better than FHA or some government insured program, and higher down payment conventional is better than a lower down payment conventional for the exact reasons that you're talking about, because the types of complexities increase, like away from cash. The complexities increase as you move further away from it being a straight cash offer. And then you would get to some sort of a government insured or guaranteed loan, like a USDA, FHA, or VA loan would kind of be next. And probably the least desirable, if you're looking strictly at financing, Peter, the least desirable would be, a government-backed program with down payment assistance and asking the seller to pay closing costs. So again, when right now we're talking strictly about financing. If all of the things are equal, we would choose the cash. There are ways to overcome that. I think there's other complexities that we can talk about as we get more into competing in a multiple offer situation.
You mentioned seller paid closing costs. So my impression is that sellers, if they've got a competitive offer situation, seller paid costs are one of the first offers they throw out the window. But you're the expert. Tell me if that is true, and also why. Why don't they like that offer?
Yeah, again, it just comes down to the complexities, and usually it has to do with the appraisal. And so, again, it gets really challenging in some instances. If you're putting 20% down, you're asking for seller paid closing costs. You might be able to get an appraisal waiver or something like that. But let's just assume for a second that you've got an offer at 350 that's conventional financing, and then another offer that's conventional financing asking for like $5,000 in seller paid closing costs. And let's assume that the one offer without seller pays is 350 and the other one is 355. So like the net number both is equal at 350, right?
Yep.
And so the complexity is, to your point, the offer for 355 asking for seller paid closing costs of 5,000 has to appraise for 355 for the seller to net 350, and then the other one has to appraise for 350 for the seller to net 350. And so again, it's just practical application of like logic, right? It's easier to appraise for a smaller amount always. That's just a logically true statement. It's always easier to appraise for a lower amount. So if all things were equal, we would just throw away the seller paid closing cost one.
Yeah. And to clarify that point, it's a lower hurdle for the appraiser to overcome in a way if it's a lower price, right? And so sellers need to wait for the appraisal to get done before they know what, so they're taking their house off the market. And in one offer, it has to, the buyer's appraisal has to come in at 355 in your example. In the other offer, it only has to come in at 350. Well, the seller doesn't want to have to worry about the appraisal. So a higher value means if it comes in lower than that, the buyer can actually cancel the transaction, get their earnest money back in many instances, and then the seller is stuck with their house and they've got to put it back on the market. So seller paid closing costs can really complicate a matter if you're in a multiple offer situation. And I think where you were going at the end there was, we need to figure out, are there ways to solve for that as opposed to seller paid costs?
Yeah, that's exactly right. And I think broadly speaking, Peter, a seller's going to look at the price they will look at first. And so again, before we said if all other things are equal, but they're going to look at the price first. So let's again use kind of a 350 home as an example. If I have three offers, one offers at 345, one's at 350, and one's at 355, after the seller paid closing costs, the seller is going to prefer the 355 over the 345 before they start looking at the other terms of the purchase agreement. So price is always the first thing on the seller's mind. Once we get past the price, now we're talking about the type of financing. I think closing date is really important, Peter. So some people are going to have, they're going to need 60 days to close or 90 days to close, for example. But if a seller wants to close in 2 weeks or 3 weeks, which isn't really possible unless you're paying cash, well, then even a lower price home might benefit the buyer or might benefit the seller if the buyer is able to close sooner. But you're going to look at price, financing. Then we're going to look at the contingencies like an inspection contingency, a mortgage contingency, obviously the appraisal. We're addressing the value of the home with a contingency. So do you have a home to sell as a contingency? And so that's kind of like the path that a seller is going to take. Price, financing, and then contingencies, I think, in that order. And so there are ways to overcome some of these things that we're talking about. And I know from your perspective, how might we overcome the seller paid closing costs, for example?
It's not always possible to overcome seller paid closing costs, but I will want to dig in deep with my buyer to say that, hey, ideally, if you can negotiate where the seller contributes towards your closing costs, great. But if you're in a multiple offer situation, let's figure out, is there something else you can do to be able to cover those closing costs instead of trying to build them into the sales price? So that can come in many different areas. One is, a gift from a family member, for example. In some cases, down payment assistance can be involved. But oftentimes that means a higher monthly payment. So it's a trade-off, and it can be a significantly higher down payment and higher interest rate, et cetera, if you're involving that. But if it's the right home for you, you need to know what your option is, right? Other things are a secured loan. And so let's say you need $10,000 and you tell me, well, I can put that on my credit card. And the answer is no, you can't. It has to be a loan that is secured. So you own a car free and clear. You can take out a loan against that. Most commonly, it might be a 401k. If you've got a retirement plan, a lot of those offer a benefit where you can borrow against it. And that can be a way to get past the issue of seller paid closing costs. They're your closing costs. So you're going to pay for them either way. You're either going to pay for them by adding to the sales price, and let's say it's $10,000 a cost. You're either going to add $10,000 to the sales price so that the seller can justify paying your costs for you, or you're going to figure out a way to borrow them separately, or get a gift for them separately. So those are kind of the typical solutions. In some cases, I rattle these off, and the buyer says, "No, I can't get any of those," and then it's like, well, make the best offer you can, but you might also need to continue searching for a home that doesn't have multiple offers, because if you're in a multiple offer situation with seller paid closing costs, it's often very, very difficult to get your offer accepted.
Yeah, I like the way you put that too. It's your costs. We just have to figure out how you pay for them. I love that. We're either adding it onto the price, or maybe we're increasing our interest rate or borrowing from a 401k or what have you. I think that's exactly the right language that we should be using. I think it's really common for people to hear the term sellers paid closing costs, and so they just think the seller is paying the cost for me. It's no big deal. But essentially, you're paying more for the home in order to make that happen. So I think that's an important way to use that term. There are some things you can do in the purchase agreement, Peter, to I don't know, not get rid of the fear of this appraisal issue, which is what we're talking about. It's also a liquidity issue, right? If you don't have the financing or the cash available, then you're not as liquid of a consumer as well. So a seller is going to understand that. But some of the ways we can overcome that, for example, is, and I'm not making any advice right here, I'm speaking generally at some of the ways we can avoid that, is maybe we're waiving an inspection. And so now we're removing one of the contingencies that many consumers will have. And so maybe a seller would be more apt to accept the lesser qualified financing because they're removing the inspection contingency. And in Minnesota, you can cancel for any reason during the inspection. And so that's a really big deal. So maybe we could do something like that. Maybe we could make the earnest money non-refundable. That's something, maybe we're doing that after inspection, or we're doing a combination of both. In those instances, it's really interesting. I've had a client not all that long ago. We wrote a $5,000 earnest money check to the seller directly, and we put the property address in there. But when I presented the offer to the realtor, I said, your seller could go buy an ATV like today. They literally could go spend this $5,000 today, because it's their money to keep. It's a non-refundable earnest money check. So just imagine that you're a seller and you can go buy an ATV today if you accept offer A, and you can spend that money however you want. Or you have to wait till closing to access some of that money. So there are ways to kind of overcome it. We have to have the willingness to take some of these larger risks, and of course be very qualified, have a very good mortgage broker like you, so that we know that they're pre-qualified and they're going to obtain that mortgage on their own kind of bearings. But there are some ways to overcome some of these things.
Let's say I'm a buyer kind of in the mid-range of all these. I'm conventional financing, but I'm minimum down. I don't need seller paid costs, but I don't have a 50% down payment. Is there even any reason for me to make an offer if I hear that, well, somebody's offering cash? Am I automatically losing that situation?
Definitely not. Definitely not. Financing is one term in the purchase agreement. I believe there might be a little more than this now, but I remember about 5 years ago, I actually counted the negotiation items. There's like 37 items you can negotiate in a purchase agreement. That was a few years ago. It's probably slightly more today. And so financing is one term, and then you have 36 other terms to negotiate. And then you can get really creative too. I just had offer come across one of my listings, and it's an estate sale. And this home it's vacant, but it has furniture and stuff in there, right? Uh, Lots of furniture, actually, dishes and everything. It was a previously owner occupied property like a couple of weeks ago, and now the owner is no longer living there. And we had an offer come across that said, you don't have to remove anything from the property. We'll take care of all of that, right? That's a pretty nice perk for this particular seller who no longer lives at the home. They're not going to keep any of the stuff that they have there. And so the buyer's like, well, we'll take care of that for you. So there's things like that that you can do to overcome some of these other challenges with financing.
Yeah, so and that really comes down to the type of realtor that you're working with as a buyer actually means something, right? I mean, I know that when buyers are working with you or your team, I I just see more commonly buyers walking away with an accepted offer. I think if it's just a matter of, hey, make an offer on this house without guidance, that that might work, but it's improved by dealing with the kind of experience and expertise that you're just bringing up. Because I hadn't thought of that, but that's in obviously that doesn't work in every scenario, but if you're really analyzing the property and analyzing the sellers, what can I do to stand out as a buyer and kind of improve my offer? It might not all come down to price, right? It might come down to some other stuff.
Yeah, that's absolutely correct. I think price is by far the most important aspect in a seller's mind. That's at least where they start the conversation, right? The seller's always going to say, how much is the offer? And so we have to start there. And then I always, when I'm presenting to a seller, it's like, let's look at the price, let's look at the financing, and then let's look at the contingencies, and let's discuss each one and figure out which one's better or worse. Now, if I can use this specific example, the other day we had 3 offers. 2 of them were above asking price, and they actually were the exact same price. And then another one was below the asking price. And the financing was all similar. And so very easily the seller was like, oh, well, let's not even talk about that third offer. It's below the price and the financing similar. I don't really care about anything else then. They just were unwilling to even look at it. There was like one thing I brought up to them. I forget what it was. But there was a unique thing in there. I think it was an appraisal gap where the realtor wrote in that the buyer could address an appraisal that came in lower by like $20,000 or something like that. It was like a pretty good term in the purchase agreement, and the seller was like, well, it doesn't really matter because it's below our asking price. We feel confident that's going to appraise for at least the asking price, which I agreed. So then we just pushed that offer aside and we looked at the other 2, and then we went line by line. We looked at the inspection. One was a 3-day, one was a 7-day. Now, again, this isn't universally true, but if you write an offer as a buyer where the seller can just sign it and they don't have to counter any of the other terms, you're more likely to get it accepted. So, for example, the 3-day inspection contingency it's substantially better than 7 days. And again, it's because a buyer could cancel for any reason in that time frame. So why would you as a seller allow someone 4 extra days to cancel for any reason? You wouldn't. You just wouldn't do it. If the price is the same and that's the only other term, you'd accept that one. So that was a really big deal. And then we went on to what the other contingencies were. I think both of them did address the appraisal concern. One of them had that concern. One of them had that concern about the personal property. So yeah, again, it's just when we're talking with our buyers, it's like, okay, let's first talk about price. What are you comfortable with? And I always ask this question, Peter. I say, so you're willing to offer $355. What if somebody offered $356? Would you be mad at me or yourself if you didn't offer $357? And many times people are like, no, like, $355 is my highest. But sometimes they're like, well, yeah, I'd pay $357. It's like, look, we need to write an offer when you're competing. That's the most that you would pay to where the seller, number one, they don't have to counter. And number two, that if they didn't accept your offer, you're like, I wouldn't pay a penny more anyways. So we start with price and then we move to contingencies.
While you're on that topic, I just want to mention something that is a constant level of discussion that when buyers are talking to you about price, and you say, well, let's add $1,000 to the purchase price, and buyers hem and haw and kick the dirt, and oh my gosh, I don't know if I can afford that. In general, that extra 1,000 will cost them about $6 a month. And what I encourage my buyers is to think of that. And if they don't know what that payment factor is, either ask you for it or ask me for it, so that you can really boil it down to say, is it worth it? If Travis calls me back and says I didn't get the house, was saving the $6 a month, worthwhile? And we don't know that answer, right? But I want to throw that out because it's a question that everybody is amazed at. It just doesn't mean much in terms of payment.
Yeah, and $1,000 is $1,000 when you go to sell the home, right? And so, but you're
Yeah.
absolutely right. From a monthly payment perspective, it's extremely low cost. Now, I never want my buyers to overpay for real estate. And the market's shifting right now, right, Peter? And so we're definitely still in a seller's market. I mean, the fact that I have 3 offers on a $350,000 home in Egan, and it's like a small rambler and stuff like this. I mean, it's not common over the course of my career that I would have 3 offers on a home like this. So it's still a seller's market, but it's definitely shifting. And so I think competitive offers are going to be more likely on the homes that are of much higher demand. And then usually those homes are probably priced so competitively that there's room to pay more, right? So we don't want you to overpay for a home. So we would do enough research to give you a range of value that might, that you can determine where you want your offer to be. And then I will be very frank with my clients. I'll say, like, in this instance, the most expensive home in this price range was $475. And so you might be able to pay a couple percent more than that, maybe up to $480 or something like that. But if you're paying more than $480, you're overpaying for the home. And I give my exact opinion on that. And I think that's helpful too, because then the client's like, well, if somebody were to pay more than $480, I'm okay not getting the house. And sometimes it is acceptable not to get the home. And we went in like 2022, for example, there were people writing offers for more than homes were worth, for sure. But I don't think that's common. I actually think that usually the home is priced maybe more competitively than it needs to be to create the demand, to create the extra offers. And then you just have to figure out how much more than the asking price is the home actually worth.
Well, Travis, we've covered a lot in this video. Is there anything else that you see that would be valuable to add?
Yeah, we did cover a lot in this video. I think it's always case by case, Peter. And so every home has a different need. The seller themselves have a different need. The buyers have different needs. And we have to try to figure out, in a competing offer, how can I make your offer look as good as it can look for you, and that it's acceptable to a seller. And if it gets accepted, then perfect. But if it doesn't get accepted, then that should be okay for everyone. It should be okay for us. I mean, it's a bummer to lose out on that offer. But at the end of the day, if we've written the best offer we can write, and we've written it as competitively as we could, and if the seller chooses someone else, then let's go find the next best house. So it's very case by case. I think that's probably the only thing I would say here. But high level, it's price, it's financing, and then contingencies.
I really appreciate you walking through that with us today, Travis. Competitive offers are a fact of life. And if you go into that offer situation with the correct mindset of, how do I make my offer look the best, you stand a better chance than just throwing out a number. And like you said, there's 37, 38 different points that you really can consider about improving your offer a little bit. And sometimes it's costing you nothing. Sometimes it just means you're working faster on your financing or what have you. But I really appreciate you taking the time because I think you may have helped some buyers figure out how to get their offer accepted where it otherwise wouldn't.
Yeah, thanks, Peter. I appreciate it as well. Your advice on the closing costs, again, every time you and I talk about closing costs, it seems like you throw out another like way to describe it that's going to help me with my clients. And in this instance, you said it's your cost. We have to figure out how to pay for it. I mean, that's a great piece of language there too. So I appreciate you, sir.